In today's video, traders, we're going to be talking about XAU USD, the beast of Forex trading. This thing is like a dragon. It moves like crazy, and traders either really love gold or they really hate it. And it is a very dangerous currency pair, and there's a really good reason for why people really don't like it. For example, even a 0.01 lot size position on XAU USD, a small position size to any other currency pair, can actually still cause a lot of account movement. That's why I said a lot of people either love it or they hate it, because if you're on the right side of gold, it can double, triple accounts very quickly, but it also can blow accounts and lose everything you have without much hesitation at all. So in today's video, hopefully we can avoid some of that by talking strategies, approaches, and my personal opinions on trading this pair. Stay tuned. Let's get into it right now. Hey traders, welcome back to the YouTube channel. My name is Nick and I talk all about trading here on this channel. If you're new or you're a new trader, make sure to subscribe down below and also give this video a thumbs up if it is helpful to you. We're talking about XAU USD. This pair, again, is one that people either love or hate. And I think that it's really important that we talk a little bit about some strategies as well as approaches to trading this pair. It's very different from a lot of the other currency pairs in the world of Forex because it really moves. This thing can just trend and trend and trend, and it can reverse and it can spike and it can cause massive movements on news. You have to be very careful when trading this pair, but there is also the positive side. If you catch a good move on the gold market, it can really do a lot of good for your account too. So today, hopefully we can talk about some strategies to do just that. So what I'm gonna do here, what I'm gonna first start out with is take this 200 period simple moving average. And I want you guys to hopefully see something that I've noticed on gold through my years of taking a look at the markets. What do you notice about the trend on gold? Well, hopefully you notice that there's these long periods in the gold market where the trend tends to continue. And there's a reason why they call it a trend, right? When something is trending, it means that that's kind of what's popular and it's continuing to be popular. Well, when it comes to gold, gold is no different here. We see that gold has some very strong trends in it. Take a look at this move back in 2009 until 2011. You can see a massive move to the upside here on gold. So we can first take the approach of, okay, well, gold is something that, at least here on the daily chart, tends to trend pretty strongly, at least according to the historical data. Of course, that could change in the future, but for the most part, we've seen that kind of be a recurring theme on gold. Take a look at the current trend we are in at the time of making this video. We have a very strong uptrend. And let me just tell you that I've avoided a lot of kind of confusion with gold simply by trading in the direction of the trend, okay? It's a very simple concept. You hear it again and again, but when it comes to gold, I'm very much a fan of sticking with the direction of the market momentum. Again, let's go back to that 2009 example for a moment. There were people, I can tell you from knowing I've done my research, I've looked back in time at the articles and the stuff that was coming out. During this time, a lot of people were extremely bearish on gold. But look at the trend. The trend above that 200 period moving average was staying strong. So all of this time, people are saying, oh, gold is too high. Gold is too high. It can't go any further. Well, what did it do? It kept shooting higher and stopping people out and losing a lot of money for the people who were short. So my experience in studying this pair has been that typically I like to stick with the direction of the longer term trend, which again, using the 200 moving average means that underneath this, we have downtrends, and over that, we have uptrends like the one we are currently in. And so that's kind of my first bias, is typically when I'm trading gold, I'm going to want to be trading in the direction of the trend. Now, real quick, you might say, well, Nick, you're in the US. Don't US brokers have a limited amount of ability to trade gold? That is very true. The broker that I use, Oanda, is not able to trade XAU USD for US clients, but I do trade gold on other markets, right? We have the stock market, we have the futures market. You can trade gold in other places. So even though I don't trade XAU USD, you could still do that in the US through other markets that we have access to. With that said, the first thing is, again, trading with the trend on gold is very important, in my opinion, to trading success. That's the first component. The next component is that breakouts on this pair are actually some of my favorite ways to trade this. Let me give you guys two examples, and you can go back in time on my channel to see the analysis that I did on these pairs or on this pair back in the day. I caught, or I at least had the analysis call out of this and this move. Both of these bullish trends that we do see here and here, both of which were caught through breakouts. And I'm going to show you exactly that. So again, when coming up with a strategy, when coming up with an approach for trading gold, my personal opinion is to be trading, number one, again, with the trend. Number two, I like the idea of trading significant breakouts of significant structures, okay? So again, we have this trend line. Let me show you guys this example. During this time, we were doing our daily live streams, which we've been doing for a while now. We started trading above the 200 period. Remember, if price is above the 200 period moving average, my bias is bullish, okay? Then what happened? Well, we started to see a consolidation period. Basically, we started to see a shorter term downtrend, but my bias remained bullish above the 200 period simple moving average. Well, next what happened is I was watching this downward structure saying, okay, well, this is a bearish trend until we break out of that level. When we see the breakout, I think that we have room to run. And I'm not patting myself on the back too much here because there's been plenty of times where I'm incorrect and I'm not right about markets too. As a successful trader, the purpose is not to be 100% correct about where the market is going next. The purpose or the goal for a successful trader is to let your winners count, let them run, make them work for you, and get rid of your losers in a timely manner. So when price started to break out to the bullish side here on gold, you can see that to me was a bullish signal. It was a break and close above this level of resistance, and that was a bullish idea or bullish setup. You can see price ran really, really strongly. We had a huge bull run for gold, and a lot of people, again, guess what they were doing on the way up? They were shorting, saying this market is too high, it has to come down, it can't go any further. And certainly, eventually it started to pull back. We started to see another consolidation. And more recently, we caught another call out on gold to the upside on the significant break of another downward channel. Okay, you can see there it is. Here's the break. And sure enough, we saw a nice run up there on gold. Okay, so this is not something that I'm, again, saying that I'm a magician for and that I knew all of this before the time. We had two good callouts there on gold, and sure enough, they played out nicely. Now, the thing to remember, though, is that it's more than just being able to call direction sometimes. It's also important to know, where do you get in? Where do you put your stops? Where do you put your targets? How do you trade this effectively, the whole roundabout, right? How big do you put your positions? Again, the big thing to remember here is that if you're going to be trading gold, understand that the volatility here is huge and that even something like a 0.01 lot size can cause a lot of volatility and movement on your account, especially if you have a smaller account. So when it comes to entries, again, I like the concepts of breakouts. And there's a couple of very simple breakout styles that I actually find very effective on gold. For example, going back to our concept we just talked about, the downward channel in the context of a strong upwards market is actually one of my favorite setups here on gold. So when price starts to break out of this level, this is where I'd be looking to aggressively get long, as gold is one of those things that sometimes when it breaks out, it just keeps going, right? It has very little pullbacks, as you can see here. So sometimes my favorite approach to trading gold is just going to be joining the move at an intelligent and possibly the best time to get involved is that breakout. I like the breakouts on gold, okay? And so the other concept is you also have the horizontal example of this. Let's say you have something like this. Well, there's your level of resistance. The overall market is pushing upwards. And when we see the break on this one, there's also a setup there that I like, which is simply trading the break of that particular move. Now, again, this is not going to work 100% of the time. A lot of times newer traders, they hear a strategy and they say, oh, buy the breakouts, it can't fail. And that's not what I'm saying. There's plenty of times where the gold market reverses and that, you won't have the winners. But in order to try and catch those big winners on gold, the ones that really rip, like this one, sometimes you have to deal with the false breakouts. You have to deal with the kind of trying to catch the next move and being late or early to the party sometimes. So the big thing here is understanding that to catch the big breaks, sometimes it takes understanding that, of course, not every breakout is going to work, and it's going to be a matter of, well, how do you manage your risk effectively? How do you optimize the chance of you making money rather than not, losing it, which involves keeping your stop loss relatively in a good spot, right? Keeping it underneath structure, some sort of reasoning behind both your entry, your exits, and everything else. So with that said, let's say that on this particular example recently, we had a nice little break to the upside. Well, you have some pretty clearly defined levels when trading with the trend here, because you can take a look at the structure that you have in this market. For example, if I get my long position out, you can say, okay, well, if price breaks out of this level, if we break out of that downward trend line that we've been watching, well, we can put stops just underneath structure there, and we could probably go for something like a 2-to-1 pretty easily. In this case, even something like a 3-to-1 may have worked. You may have just missed it. You'd be still in the position now, but you can see the 2-to-1 there worked beautifully. And so, in fact, if you were using structure on both the target and the stop, you could be using structure breaking underneath here would be where you could potentially put a stop loss, and then of course also the target being maybe the recent high, right? That would be a good trade setup as well, in my opinion. And again, these are all just ways that I personally think the best way to trade gold is. At the end of the day, what you should do is probably take your own thoughts and compile them and come up with strategies and test them on gold, because again, gold is one of those things. It's a very crazy market and it tends to move quite a bit. So you have to be very careful with your entries, your exits, and also your important, one important component is your position size. If you have a very small account, my personal opinion is you probably want to keep that stop loss relatively tight, and you want to keep your position no bigger than 0.01, at least in my opinion. Keep that position size very, very small so that you don't risk blowing the account. A lot of times people get themselves in huge amounts of trouble because they take their, their $500 account and they do something like a 0.10 lot size, thinking that, oh, it's only 0.10 lots, it can't be that bad, and then suddenly they're down their entire account in just a day when they tried to short the high. I know a lot of people have been in that experience, and I'm not trying to shame the people who have been there, but I am telling from just working with a lot of clients and working with a lot of members inside of our online VIP group, we see a lot of people who blow their accounts with gold doing stuff like this. This is a very, very common practice. Keep your position sizes very small on gold if you want to trade it successfully. In my opinion, trading it with very small positions is probably going to reduce a lot of the chance of blowing your account. And the other big thing is, of course, be intelligent with your entries. I like breakouts, but maybe you like pullbacks, right? If you like the idea of trading the pullback on gold, there have been plenty of good pullback examples as well. And that still fits in with our criteria, at least the concept that I talked about with trading with the overall direction of the trend. So a pullback might be a good way to enter. Let's say that you got your Fibonacci's out. A good Fibonacci retracement here might be from here to here. You can see price did actually pull back perfectly to the 38.2% level. Fibonacci, we drew from the low there to the high here and it gave us these levels. You can see came back to the 38.2 and rallied from there, breaking through recent highs. Okay, so that's just another example of how you could trade gold. The big thing for me is that, in my opinion, the best way you're going to develop an edge on gold is to understand that this is a market that tends to trend, tends to react to the fear going on in the world. It tends to, react to the US dollar, fundamentals. It has a lot of movement and momentum based on what's going on in the real world as well as with the price. So it's important, in my opinion, to trade. My personal approach would be to trade with the trend, looking for pullbacks or breakouts on this pair. Now, gold is, again, one of the most hotly talked about currencies, and a lot of times people make the idea, or they come up with the idea, that there is manipulation on this pair because it's so hotly talked about. If banks know that traders are very, very interested in this pair, they could be doing stuff like false breakouts, like the one we saw here. We saw the big break, price started to move up, and you can see it very quickly erased those gains, and all the bulls that got cut up here got in trouble. So you have to be also aware of the fact that gold could be, I'm not saying it is, but it could be manipulated. It could be being played by bigger institutions. And so it's something to watch out for as well in your own technical analysis. Is some of these false breakouts can be really interesting stuff. You can see that in this case, we actually had another setup recently we talked about here on gold. If we draw the fibs from this level to this level, take a look, that 38.2% held very nicely as a pullback zone here as well. Now, we haven't quite gotten back to the recent highs, so depending on your entries, if you were in that trade, maybe you're still holding on to it waiting. But the idea here is that, okay, well, gold still seems to respect technicals, even if it does have stuff like this where you have the occasional fake breakouts, and that's going to just be part of the game. Is what you get in terms of the positive side, you also can give really easily on gold as well, and the negative, right? So things can be really good for you, but they can also be really bad. Another thing that I really want to briefly talk about with gold is the psychological component of gold. gold tends to attract, and I have to be careful about how I say this, it tends to attract people who want to try and double and triple their accounts very quickly because people have seen the social media posts of people doubling and tripling accounts on gold before. Now, it's not that you can't do that, but to me, trying to double and triple your account overnight or quickly is more likely gambling rather than true, technical based trading, mechanical risk management based trading. So gold is not necessarily a bad market. It's not necessarily a bad thing. And a lot of times people say you should never trade gold. And you have all these people who say those big nevers in the market. And people say you should never trade gold. But gold is not necessarily evil. What's evil or wrong is trying to double and triple your accounts overnight, in my opinion. That's where people go wrong with gold more often than not, is trying to go for the hype, trying to go for that Lamborghini with their new, the bright red Lamborghini and all the big riches that come with it, right? It's the dream that's being sold, and gold is a very popular pair for people to try and double their account. And more often, what you guys don't hear is the many people, and almost everybody who's trading Forex, losing money. Right? They're losing money very quickly on gold. Gold is one of those things that you can lose your money very quickly if you are not careful and you're not managing your risk. Again, there are some really great ways, in my opinion, to trade with the trend on gold and to do it in an effective manner. But I think you have to be careful. And I think you have to avoid trying to go big, trying to go all in on gold. I think that's one of the fastest ways to lose your money, to waste your time, waste your money, and just at the end of the day, just treat this like gambling. If you want to be successful with trading gold, again, we've talked about some ways here, and keeping those position sizes small is really going to make the difference, in my opinion, between trading gold successfully and trading it unsuccessfully and losing your money. Guys, I hope you got something out of today's video. Make sure to like the video down below and subscribe to the channel if you're new, and we'll see you back next time.